It's too late for you to buy Bitcoin, and by the end of this video, you'll understand why I believe this. So what is Bitcoin? Well, Bitcoin is a cryptocurrency, meaning that it's a form of money that is completely digital. If you've heard about cryptocurrency before and been confused, you're not alone. Cryptocurrency has been a hot topic, and lots of people have strong opinions about it. Basically, the main use for cryptocurrencies is to give people the ability to send money directly to someone else online. There are some other uses for it, but this is the main purpose that cryptocurrencies are usually created for. And unlike sending money through apps like Cash App or Venmo or Zelle, which are just a digital IOU, sending Bitcoin means you're actually sending money to that other person's wallet directly, and it happens almost instantaneously, without needing to use any banks or any other form of middleman. You also might have seen a Bitcoin price chart, which is extremely volatile with huge spikes and huge crashes. And the reason for this is because cryptocurrencies is a new technology. People are still deciding what Bitcoin is truly worth. Another big factor in determining the value of a cryptocurrency is the process of how it's created. Now, most cryptocurrencies are created by a process called mining, which requires computers using electricity to run certain programs that will eventually produce cryptocurrency. Now, one thing that sets Bitcoin apart from most other cryptocurrencies is its mysterious creator, Satoshi Nakamoto. See, nobody actually knows who Satoshi Nakamoto really is, and this makes Bitcoin a little more stable as no one can change the rules on how Bitcoin is created or how much of it is able to be mined in a certain period of time. And this actually brings up an important fact for a new topic that people call central bank digital currencies. See, central bank digital currencies have yet to be created, but these would be when the government creates a cryptocurrency. Unlike Bitcoin, the supply of these cryptocurrencies would be controlled by the central government. And in my opinion, this would make them a much worse investment, as the government could inflate the value of these currencies by just creating more, similar to the way that central governments can inflate their fiat currencies, like the US dollar. So if you're thinking about putting all your savings into Bitcoin, I think it's too late for that, because we really don't know what the future is going to look like for Bitcoin and whether or not the price will continue to go up over time. But there is a smarter way for us to invest in Bitcoin while protecting ourselves from the risk of another Bitcoin price crash. I use two different strategies to do this. The first is called dollar cost averaging, meaning that I put in the same amount of money to Bitcoin each week, no matter what its value is at. And the other strategy that I use is called portfolio rebalancing, meaning that I only have a certain percentage of my investments in Bitcoin, and I have an automated investment account that will keep each of the investment categories at their set percentage, meaning that if the price of Bitcoin goes way up, it will sell off Bitcoin and take that money and put it into the rest of my investments. Portfolio rebalancing forces me to stay calm and keep buying more Bitcoin when the price is really low after a crash. And on the other hand, it prevents me from getting too excited and buying more than I should as the price is climbing and spiking. Now back to dollar cost averaging, I'm also able to take advantage of the times when Bitcoin's price crashes, because as I'm buying when the price is going down, even if the price only goes back to where I originally started buying it, I'm going to be making all of that money when I bought Bitcoin at a lower price than that. This way, I can make money even if the price of Bitcoin only gets back to what I originally started buying it at. So in short, I think that Bitcoin is way too volatile for you to risk putting in all your money at one time. Using dollar cost averaging and spreading your investments not only into Bitcoin but across other asset classes as well will help protect you from Bitcoin's volatility while still allowing you to benefit from it. But hey, if you're getting value from this video, please click on the next video where I give my full investing strategy and talk a little bit more about portfolio rebalancing and how it protects me from market volatility in general.